The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 3rd, 2017 terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648, internationally 727-445-1044. So let's go ahead and get 2017 kicked off. Of course, this is Terrific Tuesday, and it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 22 points at 19,784. S&P up 8 at 2247. NDX up 26 points, trading at 4890. NASDAQ Composite up 19. Russell 2000's off a buck. The semiconductors are down 5. New York Stock Exchange up 45 points. The Wilshire 5000 up 70 points. They're the leaders. Well, the NDX actually leading the clubhouse. In the clubhouse, the transports are down 56 points, about 0.6%. Gold is up nearly 1%, up $10. Silver is up 2 3/4%, up 43 cents, trading out at 16.42. Light sweet crude has given back its early gains. It's down to $1.27, trading out at 53.39. Leading the charge here to the upside, it is Google. Alphabet up $15, about 2%. Regeneron Pharmaceutical is up 14 or 4%. McKesson Corp up $7, 5%. Intuitive Surgical up 1% or $6. Biogen up $6. To the downside, Humana Inc. leading it to the downside off $8.60. That's 4 1/4% to the downside. Nvidia off $6 or 5 3/4%. Intercept Pharmaceuticals off about 5% or $5. Buffalo Wild Wings off $5. Of course, I'd love to hear from you. Find out what it is that you'd like to take a look at. But you can send me an email, steve@tfnn.com. Of course, any ping will do inside the Tiger's Den, and calls are preferred. So let's go ahead and begin by taking a look at what has the market done thus far today. What did it do last night when futures opened? So on and so forth. So as we take a look at the so on and so forth, let's go take a look at the ES Mini out here. And when the markets opened up last night, we saw a nice little gap to the upside. 6 p.m. last night, the low of which was 2240.75. Price thus far is coming back to the breakout gap of last evening. The actual breakout area would be the high of the close on Friday. On Friday. So that number is going to be 2235 1/4. But here is what we know. A key level that the ES Mini, if the markets were going to rally and rally successfully, they should have been able to break through 2258, 75 to be exact. Yes, apogee is unreal, but it is real. That's why we pay attention to it, because it is a significant barrier of either resistance or support. Right now, PS dailies just don't. So 2258.75, I don't want to be exact or anything, but that is the place to be watching. Now, what we can't rule out here just yet, if we take a look at retracements, let's just do that. So we know we've got an opening gap, right? Gaps are our friends because they provide us with a lot of information. A gap basically is the beginning of a wide-ranging bar. When you gap up, it's just that you gapped up, that's all. It still is a breakout or could be a breakdown when you gap to the downside. So we know where there's a significant resistance, 2258. If I take a look at retracement levels, let me do this here. From the low on Friday at about 2:30 in the afternoon to the high earlier today at about 10 o'clock. What's also occurred out here is nothing more than a 0.618 retracement of that move, 2240 to be exact. Now, if price breaks down below 2240, there's nothing here on a 30-minute chart to suggest to me that it won't. So let's make sure that we get that straight. Although it's at a key area of support, then price ought to pull back to the 0.786 area, 2234, which also happens to coincide with the opening of that gap between Friday and between last night when the equity futures began trading. So, and the reason we want to pay attention to this is because this can often be an area where you would see a market pull back to, either to the upside or the downside, in this case here, to the downside to possibly form an A to B equals CD to the upside. Cannot be ruled out here. However, it is the sellers that certainly are the ones in control of this game. And we'll go take a look, and I'll give you some of the reasons why, because really I'm referring to the bigger picture that is out here versus just what's going on a 30-minute chart. But we need to take a look at what is actually going on intra-session to understand. If we take a look at the volume, it's not as if volume has come out of the market. Here's the NQ and the ES 10-minute charts here. Left-hand side is the ES. NQ is on the right-hand side out here. It's not as if volume is accelerating to the downside. So in other words, price is pulling back and basically lightish volume. Now, it's pretty tough for us to really even make that statement in all sincerity, because it still is holiday-ish type of trading out here. So we have to be somewhat cautious. But what we do know is inside the ES mini, as we go back, we take a look at that 30-minute chart out here, price pulling back to the 0.618 area. So what occurs, unravels during the next couple of hours out here will be important. One thing is clear. Well, it's clear to me. You get below 2228, and that says that there is sellers that welcome to January. Sellers are in control. For how long? I don't know. I could say for the rest of the month out here. So it's really a matter of when, and that when may already have occurred, versus if for the most part out here. If we take a look at the NQ, we're going to see the same type of pattern out here. I believe as long as my system will cooperate with me inside the NQ, you can see that price also pulling back to its breakout session from last evening. Price never made it up to that magical resistance line, which is 49.41. It did, though, on Friday early morning, about 12:30 as the clock stroke midnight out, or struck midnight. Man, I'll get my my grammar down pat maybe in 2018. We'll try for 2017. But what we also know here about the NQ, if we just take a look at retracements from the low from Friday to the high of earlier this morning, also a 0.618 retracement level. On the 30-minute chart out here, nothing to indicate to me whether it's going to pull back any further. There's nothing that indicates that it has found a bottom as we speak, whether it's market profiles, whether it's bullish reversal signals, anything along those means out here. But at this stage of the game, all that you and I really know is there was a breakout. We've seen a 0.618 retracement level, and that says the levels where we're at right now are very important with regard to the next move on an intraday basis. So when we get back, let's go take a look at some daily charts or anything else that you'd like to look at. 877-927-6640. Steve Rhodes from TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the, what do we have here? We've got the, well, here's the first request that came in. That's really where it was. I was kind of trying to multitask and did just basically a lousy job of multitasking. But the first request that came in is if we could go ahead and take a look at the ES Mini. On its daily, let me see, please review ES Mini in detail and TAS weekly and daily profiles out here. So here's the daily chart for the ES Mini. And here's what we know thus far. We've been bouncing in between the daily TAS market profiles. 2273 up at the top, which has not been actually tested, certainly not been exceeded. And to the downside, which on Friday was a test, was at 2234. So price is just traveling with inside that range out here. What we also know is that up at 2273, even though you can't see it because the blue line has overtaken the lime green line, it also happens to be the top of the weekly box. So 2273 is a very key level of resistance. Price is now trading just slightly below the weekly point of control, which is closer to the top of the box. So from a weekly standpoint, it is sellers that are in control of the price area between 2273 and 2198. But that 2198 area doesn't come into effect until we see a close below 2234. Again, that was a test on Friday. So we took a look at the 30-minute chart earlier. We know that price ran into the perigee lunar phase resistance level. And that is a key area out here. We know that it's not been able to bust through that level, but we also know price has pulled back on an intraday basis to the 0.618 area, and in essence is closing the gap that was left at last night's open. Last night's open out here. So nothing conclusive other than we're trading inside a range. And inside of this daily price range out here, there's actually buyers that are ones that are in control. So it could be sideways to slightly higher price until you see 2234 break. That slightly higher, we know is going to be that 2258 area. If we take a look at what else is going on that we don't really see here on this chart, just simply because of the set of tools that Stevie uses. But we'll switch over to this daily chart out here. And what we do know is there was a nice little TD, Tom DeMark sequential, and TD combo, a blue 13 and a red 13 that account. The red 13 accounted for the high on December the 13th out there. Now, that alone is not necessarily, it's an indicator, right? And as indicators go, then you're looking for confirmations out there. There's several ways to do it. What I can share with you is once you start trading below the price oscillator unchanged line, that is the red line on my screen, that tells us that the price oscillator has begun to fall. At this stage here, it's still above zero, which says that there's a retracement that is going on. It has a different meaning when it gets below zero. And price is below that area. So on a longer term perspective, daily chart out here, this tells us, as I had said earlier, that it's really sellers that are the ones that are in control of this price area. It is more evident, actually, in today's price action inside of the NQ. And the reason I say that is because the pop, and I do mean pop, higher was nothing more than a test of that oscillator unchanged line. That's that red line on my chart out here. Now, what we can see with regard to topping signals with inside of the NQ is nothing more than a seventh wave move to the upside. That took place out here on December the 27th. Since then, we've seen a sell-off. Today and Friday was a test of that oscillator unchanged line. Again, the price oscillator difference between two exponential moving averages, in this case here, the 19 and the 39 period, the faster is falling quicker than the slower. And what we've got here is a falling price oscillator. Now, the game changes if, in fact, the NQ at any point in time is able to close above Stevie's red line, 42.9877. It hasn't. Who's in charge of the NQ, buyers or sellers? It is sellers with regard to from a daily perspective out here. And that is important to recognize and understand. And really, that also would then say, hey, Steve-O, come on. You can't just look at the ES and the NQ out here. Just because two of them have given us sell indicator signals, that doesn't mean the market has turned. And voila, you are correctamundo. And what that means is we should go take a look at the Dow equity futures contract, that being the Y and the YM out here. And we can see that price was moving higher, and it was doing so just slightly with less relative energy back on December the 20th. That was a sellish type of signal as soon as the bearish reversal candle arrived. And voila, it did, albeit very small back on December 27th. Nice little shooting star. Then followed up the very next trading session with a bearish engulfing. And we have seen price move lower. Price has not been able to break the 20,000 mark inside the cash indice. Price has not been able to test even that oscillator and change line at 19,982. That might have done the job out there, by the way, to get up to 20,000. So even if we do get above 20,000, we took a look at this last week, until price closes above that oscillator and change line, doesn't mean anything out here. And we're really starting to head towards a period of time that is unfavorable to the market moving higher out here. Again, and even though you and I are taking a look at short-term charts, this is actually, when I say short-term, daily charts out here, that statement is really more short-term. Are the markets going to move higher? The answer to that question is yes. Absolutely, positively, 2,000% guaranteed out here. The question is going to be when. We got to look for patterns that complete, just like we have seen patterns up at the top out here. We're going to have to look for those same type of patterns down at the next bottom that's out there. And then to finish this off out here, we should really take a look at that old Russell 2000. Because when we take a look at its futures contract, price had been moving higher, doing less relative energy, never made the type of wave count that we might like to see at tops, but it did make a top to mark sequential count out here. Basically, at the very top, this was prior to, or this was post making a move higher with less relative energy, than giving that nice little evening star candle out here. That's a bearish reversal term for, guess what? I believe I have made a top out here, and now we have seen price continue to be deflected by that oscillator and change line, so some retracement is still in order. The depth of which I don't know exactly. We will take a look, and we'll always focus on those profiles. So this brings us back into the ES mini, into taking a look at the daily profiles, and that says that 2234 is going to be the next key. And here is the deal, my friends, my compadres out there. If, in fact, you see a close below 22.34, you can pretty much guarantee, although we can't guarantee a gosh darn thing around here, but it does make sense to actually show up with some conviction, because you don't want to be hearing me say, well, maybe if this, then that, the other. You'd like to have a little bit of conviction out there, and then we'll make some changes along the way. And I get that from General Norman Schwarzkopf, by the way. You know, and really each of you have that as well. Maybe I'll tell you that story. To try to do that in 15 seconds would really not be ideal. But you close below 22.34, and I will say with conviction, price will move to 21.98. It's an interesting story. It's a real interesting read, if you haven't read it, about when Colin Powell was the undersecretary, or he was working for Schwarzkopf, and where that came out is a discussion about how does Stormin Norman, or how did he, make his decisions out there? It's really the same process that you and I go through, and having conviction is a beautiful thing. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's up 37. S&P is up 11 points right now. Danny has requested us to take a look, put in a request here, take a look at the Japanese yen. So let's go do that out here. Let's take a look at the yen futures. That way we have no delay. in price data in action out here. So we can see that when the futures contract here opened up last night, we're trading just about where it opened. Then we saw a big push overnight lower. That meant that the yen was weakening out here. Now, when the yen weakens because of the directional correlation that typically occurs between bonds and gold and the yen, for some reason, the yen ruling the world out here, as it was pushing lower, it did not look good. However, there's a chart here that I would put up on my screen. I will put up. Unfortunately, it doesn't have today's candle in there. Why, I don't know. Because it's messing with me. Because it's toying with me. But it's just a toy. But what we can see here is Stevie's red line, that oscillator unchanged line out here, priced at 84.44. And I would say that, Danny, that's an important level to take a look at. That actually was tested, held as support. I don't recall if the yen actually got down that low. I think that it did, or very close to it. We also know that there's a nice little, to those of you that believe in using Tom DeMark's indicator tools, the nice little TD sequential countdown on December 19th, the number 13, price being above that oscillator and change line, just the exact opposite, in essence, of what we were looking at when we looked at the, what was it, the Russell 2000 futures contract, maybe the ES Mini futures contract, just in reverse order here. So what this is communicating, Danny, to you and I, is that the yen is at this stage here trying to find a bottom, meaning that it would move higher or should move higher, and then that would add to some weakness inside of the U.S. dollar index out here. Now, the key area of for the yen futures to get above, if all that's going to occur, is going to be that weekly profile bottom, 85.74 penniroonies out there. So that is the number where price needs to get above. It looked like, hey, on Thursday and on Friday, that the yen was out of the woodwork, and unfortunately that is not the case. The termites took over, got it back inside the woodwork, and now that next level of resistance that it needs to get above, it's going to be 85.74. Nonetheless, even with that move to the downside, or that move to the upside inside the U.S. dollar, which was also as a result of the euro, the Great British Pound, the Swedish krona, the Canadian loonie out there, and the Swiss franc, because all of those are what make up the U.S. dollar index out here. There was a request that came in asking about, and I'm sure it's been talked about all morning. I think I heard Tom and Tommy talking about the strength in the U.S. dollar index, and gold basically ignoring it. It was Tom's contention, and a well-thought-out contention that actually was gold that was telling the picture out here. Now, if we take a look at that one-day rate of change in the U.S. dollar index, so let's go take a look at that. That would basically be this chart here. Now, on this chart, the very top portion of the screen is the U.S. dollar index. The very next section is that one-day rate of change. What the heck are you talking about, Steve? One-day rate of change. I mean, from the prior close to where it's trading right now. We can measure that in percentage, and right now that percentage is 0.76 as far as a one-day rate of change. Now, if you take a look at the U.S. dollar index out here, the largest one-day rate of change that we have seen in a long time was back in June of 2016, June 24th to be specific. That rate of change was 2%, a little over 2% in one day out there. We say wide-ranging bars, usually price never really markets don't end on wide-ranging bars. And that was certainly a wide-ranging bar out here. In fact, we really saw the U.S. dollar index from June 24th, give or take a few days out here, move sideways to lower all the way until October. So it was many, many months out there. And with regard to gold, gold also happened on that day have the same type of rate of change. In fact, it was larger percentage rate of change, 4.69%. Then it moved higher out here. It didn't actually begin moving lower until about the November 11th, 11/11 type time frame out here. So what do we make of all of this out here? And that's a great question. Well, you know, what I make out of it is I'm going to focus more on what that yen is doing, the yen futures, and watch that correlation to the gold or to bonds as well. But just because we've seen this huge move, in fact, today it's backed off. So we're not even, we had a larger one-day rate of change inside the U.S. dollar index back on December 15th. So I don't know where this is going to end the day out here. But it's not necessarily like, hey, this is a this is like a football player who just scored or made some great play out there. And you know that high five and stuff where they jump up in the air and bang each other's bodies? What do they even call that out there? I call that, I won't use the word butt-anine out there. Asinine is really what I was going to say out there. I have seen guys actually make that move, come down and actually injure themselves. I prefer the game to be played like the quarterback from USC out there. Pretty even keel guy, would you not say? For those of you that watched the game yesterday, Penn State USC, that was a great football game out there. Regardless of which side you were on, that was just simply a good football. A lot of great football. That's the bummer about it being January 3rd, although we do have some games. We got the NFL, obviously, and so forth. But you there we go. We got to get that word into the encyclopedia, the dictionary out there. But you must, if you are a football aficionado at all, it's always a great time of the year, the holiday time of the year, because you can go on football overload out there. But if the games are good, it's actually a lot of fun. Okay, enough of that. So, what are we going to make about this move inside the U.S. dollar index at this stage here? Not much. I mean, that's really the what we would be saying out here. And so I have to fall back on Tom's comment that it was gold that was really telling the picture. And if it's gold that's really telling the picture, trading out 1161 right now, we put that up on our screen. We'll see both the daily and weekly market profile out here. It looks very wonderful. In other words, price came down, tested, and held the bottom of that new weekly box at 1146. That point of control also being at 1146. That is a strong area of support. And now the key is going to be, can we see a breakthrough of 1169? You're trading 1161, give or take right now. You close above 1169. The next move that you see inside of Goldilocks will take you up to 1,211 buckaroonies out there. That'll put some juice. That'll put some energy inside of all those mining stocks. We've got silver. That's trading up at 1642. As we take a look at it, you can see that it has already tested, yet rejected the TAS weekly high. And that level is the bottom of its box, 1653. What was I thinking out there? So at this stage here, price trying to get back inside the range of its weekly market profile. And if it can do that, that number is 1653. Silver, hi-ho silver, is likely to go ahead and raise all boats higher. And those boats, in the case of silver, would take up to $17.68. So the key level to be paying attention to inside of silver, just to repeat, right now is 1653. The key level to be paying attention to inside of Goldilocks, well, that's going to be the 1169 area out there. And inside of the Japanese yen, where is it? Come on, let's get it before the breakout here. Let's see. You know what? I don't have the current contract out here. I need to do that. I give you that number. Breakout here. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. That was up 24 out here. Before we went to that last break, we were taking a look at the yen futures out here. And when I had pulled up the original chart, I had pulled up the continuous contract. So I'm glad that I went back just simply to provide you with the actual number that you want to be paying attention to. We've got the March 2017 contract up on our screen. What was occurring today, and these are the more accurate numbers. These are the accurate numbers for us to pay attention to. What was also going on inside the Japanese yen futures, I should say, was nothing more than a test and rejection thus far of its TAS daily bottom out there at 0.8503. So, we've seen these TD Tom DeMark sequential counts. We've seen price trade above the oscillator unchanged line. And now what we're really watching for, price is likely to make another attempt at 0.8629. That's the top of the daily box. You get above that. That's also going to be above the weekly. So it's a real significant area of resistance. Just like in the case of gold, I think it was gold. We were looking at how was it gold or was it silver? One of them, where the point of control was at the same level as the bottom of the box out there. I think that it was gold. Again, I can't be certain. In any event out here, I'm just talking to myself. Not a good thing to do, but because you'll think I'm crazy, but you already think I'm crazy anyways. So I'll just continue talking to myself. But in this case here, it's a really strong level of resistance. So watch that level of 8608 out there. That's the weekly bottom of the box and point of control. If you get above that, then 87.55 is in the cards for it. Any other requests out here? I'm just going to take a quick peek at the email on the phone, and I don't see one. So let's go taking care of gold, really currency for the most part, U.S. dollar. What do we want to look at next? Let's just take a look at some of the indices, maybe just one by one. Wouldn't be bad to do that, just to refresh our memory as to where are we at? What are the signals? What's it all look like? NVIDIA. We'll look at the NVIDIA, Bill. If we take a look at the NASDAQ composite out here, what's the signal that we've got with regard to it forming a top? Really, not much. You got wave number 4, and that can be an area where you start to see price back off. So that's one possibility. With regard to A to B equals CD, patterns never completed. 5607 out there, so we don't have a completed A to B equals CD. In other words, we don't have a completed sell the D point. We don't have a Tom DeMark count. You get a nice little setup count out here, maybe right around the trading session of December the 19th. Price is below that oscillator unchanged line, so just a slight retracement underway inside of the NASDAQ composite. However, it is sellers that are in control, not only by looking at Stevie's red line, but if we do go take a look at the advanced decline oscillator out here inside the NASDAQ composite, we can see that it is also at this stage here below zero. And once you get below zero, it tells us that tells us what? Tells us that sellers are the ones that are in control. So we'll look at the other indices, but Mr. Bill out here would like us to go take a look at NVIDIA. So let's go take a look at NVIDIA. That was the performer of 2016. Now it has been the lack of performance out here for the last 3 or 4 trading sessions out here. And after forming that big, huge key reversal session as it made its high with volume, by the way. So that was the December 28th session out here. And so I would say, Mr. Bill, that at some point in time, NVIDIA is going to be up there. Now, that was the daily chart. If we take a look at just out of curiosity, we have a high volume high on the weekly. So at some point in time in its history, NVIDIA should make its way back up to that high. Again, that high being 119.93 out there. But the question is, hey, what is it doing today? So if we come back to the daily chart for NVIDIA, what we are going to see, I believe what we saw there, is that what is under attack here, Mr. Bill, is the daily point of control. And that daily point of control is priced out at 101.09. You're trading right now at 100.64. Now, the volume on today's, I didn't mean to do that. The volume on today's action is about 25 million shares. That 25 million shares is taking on what could be arguably a B point of an A to B equals CD to the downside. Like, just nice and smooth and fast when we say that. But it is the swing point, and that has volume of 54 million shares. So nonetheless, what NVIDIA is doing, even by closing below its TAS daily bottom of the box and below a swing point, the B to the downside out here, it's doing it on light volume. So that could be setting up what would be termed, I don't know what page, I'd say page 294 in Tom's book, The Art of Timing the Trade, although don't quote me on page 294. But inside that book, he talks about a Gartley buy, doesn't he? And in this case here, this would be referred to as what kind of Gartley buy? This is certainly not a confirmed. What's the terminology that he uses? Somebody out there knows. It just is kind of escaped from my mind out there. But a Tiger Gartley buy, and that is what NVIDIA is forming out here, Mr. Bill. Now, the 101 A to B equals CD to the downside, assuming that volume doesn't pick up to the downside. First level is going to be 94.79. Level number 2, 90.13. Level number 3, 84.20. The reason why I say it is because we don't know which level that pattern would actually complete at. You don't want to make the assumption, because you know what happens when you assume things out there. Yeah, you know. So we want the bulls and or the bears to confirm for us what is actually happening. So that's why we look for those bullish reversal signals out here. And that most certainly is going to be some type of retracement, 0.382, 0.618, 0.786, when that unfolds out here. So at this stage, NVIDIA doesn't look like it is game over. Looks like it's just simply a retracement that can continue moving further to any of those price areas. And, of course, you want to watch the last breakout area. That was the November 11th session, anywhere between the high there of 87.77 and the low of the prior, or the high of the prior session, which would have been 71.50. So that could be a price target out here. And that assumes price will move lower, I would say, Mr. Bill, if, in fact, it closes below 101.09. So that is my take. What's your take? Would love to hear from you. That ticker symbol there, NVDA. Was there any other type of top that had formed out there? Was price moving higher, doing less relative energy? All those types of things, a Tom to Mark, sequential or setup or combo count? And the answer to that question is no, there wasn't. It doesn't mean that it can't be a top, but at this time, it is a top, it is a high with volume, and eventually price seems to make its way back there. Okay, so back to the other indices, and you are most welcome out there. Always glad to take a look at, hey, look, this show is really for you guys and gals, and so I want to take a look at whatever it is that you want to take a look at. And, you know, maybe your eyes will see something that mine don't, or vice versa, and we're all here, you know, one for all for one kind of a thing. And that takes us to the semiconductor index out here. And as the semiconductor index was moving higher, it was doing less relative energy. It also formed a candle similar to NVIDIA. And I would say NVIDIA is inside the semiconductor index, so no big shakes there. In this case here, though, was more of a topping pattern, and it was a exact Tom to Mark setup. And price is now below that oscillator and change line of 924.86. Now, I don't even know if that's given me, yeah, that should be where we're at today. But let me just make sure that my system's not screwing me up And luckily, it is not screwing me up. So where is it then that the semiconductor index could head to? And that is an excellent question. I wish I could answer that for you. What I would say is you just simply go back to retracement levels from the last swing point low to the current high. And that's going to give us a price level of about 874.95. That's on the semis. Right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 27. S&P is up 7 points. NDX is up 22. The real quick short story of Colin Powell and Norman Schwarzkopf. And I cannot recall which book it is that I read it. So some of you may have read some of these books as well. And it gets down to really being able to make decisions, because decisions are really key out here. And so there's always influencing factors. You know, when you listen to the shows here, there's going to be influencing factors. We share with you some of the different patterns and what's going on inside the market. So, and it's our intention for me, my intention is to let the market influence me. What is it communicating? Identify these areas of resistance, support, be able to go ahead and just simply make a decision and pull the trigger. And this story here, it was during all kinds of processes when Schwarzkopf had to make very important decisions out here. And he would bring in all the different generals and folks from the field to update him on what was going on. And Powell was working, would be taking notes and so forth. And Powell considered to be a relatively intelligent man. In fact, he thought so of himself. After Schwarzkopf would make a decision, one of the times he made a decision, key decision out there, Powell asked him, how do you know that that's the right decision? Because Powell, after listening to everybody else, he concluded he could not figure out what the correct decision was. So he wanted to learn, how is it that Schwarzkopf, Storm and Norman, knew that that was the right decision? This is about conviction, folks. And Schwarzkopf turned to him and said, I don't. He didn't know if it was the right decision. He said, I made a decision. Someone has to make a decision, because this was a time period where people were going back and forth and couldn't make decisions. And he said the key is you make a decision. And then if things don't work out exactly, we'll go ahead and adjust along the way. Folks, that is really the message of how it is that you should be, if you are a trader, how you should be trading inside these markets. Go ahead, do the work ahead of time. I watch these guys and gals do it in the den all the time. They identify their levels of support and resistance, and they go ahead and they make a decision. And how do they know if it's going to be the right decision or not? And each of them will tell you, actually, they don't. They just simply have done their homework, and they will make adjustments along the way. Sometimes something that appears to be a short-term top can be something of a longer-term top, and vice versa. So the moral of the story is make decisions, and along the way, go ahead and be willing to adjust. Now, when you're trade investing, make sure that decision that you're making is guarded on both sides of the trade, right? One cancels the other type of order. Because it is when you enter the trade, it's the time when you are the most objective, right? And so you have a price target. So you have an upper boundary and a lower boundary. You can use some of those boundary lines. You can go ahead and use these task market profiles. They're excellent tools for doing that, depending on the type of time frame it is that you're trading out there. So it's all about decisions. It's all about influence. And I will promise you that if you are a mother, a father, a grandmother, a grandfather, a brother or sister, you're an owner, you're a this, you're a that, you are an influencer. And it is the most important tool that you have in your arsenal. And all you've got to do is figure out what it is that influences you, because I promise you what influences you is different than what influences me. And for those that work for you, or your kids, or your significant other, what you really need to know is what influences them. You see, folks, the key to life, and I know I've gotten off the markets here, but this is even more important than the market, especially as we begin the new year out here. Folks, you need to know what other people's needs are and provide them with those needs in the way that they want them met, not the way that you want them met. So my goal out here is to meet your needs. But just send me those cards and letters, those emails, those instant messages, those phone calls. Tell me what you're looking at together for 2017. Let's be a team out here. Let's figure out what the markets are doing so that we can make good decisions. Have a great day. We'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.